Welcome back to the Dividend Diplomats YouTube channel. You know, you got your boys Bert and Lanny here, and we're going to feature three Dividend Kings that are possibly showing some value right now as the stock market turns down for the additional consecutive week.
Before we dive into these Kings that are all phenomenal, and we own all three of these Dividend Kings already, smash the heck out of that subscribe button. Give this video a thumbs up. Let's go. College football's kicking off this weekend. NFL next weekend. Cavs are making moves ahead of the NBA. But today, we're going to see if we're time to make moves in our dividend stock portfolios.
Bert's got his Buckeyes jersey on. He's about to paint his face scarlet and gray. He is pumped up and ready.
If anything, I paint my face this color because my face is normally scarlet and gray.
Oh, you guys remember that. Just remember that, guys. But yeah, we are showcasing three dividend aristocrats, three dividend kings, three dividend stocks in our top 5 foundation stocks now for your dividend stock portfolio. As there's extreme volatility in the stock market, as the S&P 500 was down again for the week, cracked the low 4,000. They're at 39.2426, down just under 3%. It's time to also consider safety, quality, reputable, consistent, and reliable dividend stocks right now.
And look, people, Lanny hit it on the head with that last point, consistent and reliable. These three companies we're going to talk about today have all increased their dividends during some of the worst economic crises we faced and some other recessions in the past. This isn't their first rodeo going through bad times. This isn't their first rodeo going through inflation. Still, through those bad times, they managed to increase that dividend, and they managed to increase it even more during the good times that followed the bad.
Just remember, guys, bad times don't last, but bad guys do. So, and also, hopefully you guys are enjoying your Labor Day and you're using your finely crafted Dividend Diplomat coffee mug, probably presented to you by the Dividend Diplomats. Check the shop below.
That's right. All right. So now that while you're checking the shop, we'll just quickly run through the 3 metrics of our stock screener as a reminder to everybody to see how do we find these undervalued stocks and how are we going to evaluate these 3 companies. 1, price to earnings ratio less than the S&P 500. 2, payout ratio less than 60%. 3, that history of increasing the dividend, which these are already dividend kings. So these 3 stocks have increased the dividend for 50 plus consecutive years. Lastly, that bonus metric, the dividend yield,
which is what is that current yield? You take dividend income, divide that by the stock price, that equals the dividend yield. And that's how much that company is paying you. So guys, there's no question right now, stock market's dropping. Every company is pretty much in the red. Significant layoffs are happening. Companies are revising expectations dramatically. Inflation's definitely have crept into operating performance, increasing their costs, decreasing profit margins. So there's a lot of headwinds right now. Bert, I know the Fed's about to increase their, the Fed rate at the end of September here, more than likely 50 or 75 basis point increase as we keep seeing red. I know Bert and I keep seeing green waves of opportunity here to buy dividend stocks for less, adding more income for less.
What's fun about this too is we've been on a kick where we don't really want to add too many new companies to our portfolio. We're trying to actually slim down our portfolios, if anything, so we monitor less stocks. By looking inward, by looking there, we're just maybe looking to nibble, add a few extra shares here or there to positions we already own, which makes this exercise even better, even easier, because we're not looking to build in a $5,000 position right now.
You're spot on, B. So let's dive into these 3 dividend stocks right now. Let's hit them out the gate. Bert, you really should take this first dividend king.
Yeah, the first dividend king is Blow Inc., ticker symbol CBI. No, I'm kidding, everybody. It is Johnson & Johnson, ticker symbol JNJ, the dividend king, the Sultan of SWAT, all of the great nicknames out there. Old Reliable, as we famously call Johnson & Johnson. Why am I taking this, Lanny? You know this. Everybody in this channel knows it. You're probably bored as heck hearing me talk about them. My wife and I have been buying 1 share each every week of Johnson & Johnson on our journey towards 100 shares individually. After this week, we're at 87 shares. And quite frankly, Lanny, we've been enjoying the last few weeks because Johnson & Johnson's price is creeping back down from the mid 170, 180 levels where it was several months ago.
Exactly, guys. It's down again for another week. It's down below $163 per share. If you guys don't remember, J&J at one point was creeping up to, pretty much close to $190 a share. So they have now come back down almost $30 from just a few months ago, which is why there's so much more value now with this Dividend King. Obviously, Bert and his wife keep buying shares. I'd be shocked if he's not adding a couple extra shares at these type of prices, guys. So they closed at $162.74 on September 2nd to close out the week into Labor Day. And man, Bert, these dividend metrics are looking real solid.
Yeah, so let's jump right into their first metric. PE ratio price is 162.74. Forward earnings estimates for Johnson & Johnson 10.07. PE ratio 16.16. We always joke around about J&J being between 16 and 18 for a PE ratio. It's nice to see them on the low end of that range for once. Are they going to dip below it, Lanny? They're very, very close.
Very, very close, guys. But yeah, 16 price to earnings. Can't complain about that. That dividend payout ratio, that second metric for J&J, is perfect. It is at 44.89%. They pay $4.52 annually. It is a beautifully growing dividend income stream, paying $1.13 per share per quarter. Perfect, man. It's perfect.
Their 5-year dividend growth rate, average dividend growth rate, is 5.95%. They've increased that dividend for 59 consecutive years. So pretty solid there. It's consistent. Every year it seems to be right around that 6% mark.
It's a good.
It's a very good, Lanny. So let's talk about that yield, that bonus metric, that cherry on top. With the falling stock price, their yield's actually above 2.75% again. It's at 2.78%.
And that's why I keep thinking Bert's about to close the gap on 100 shares sooner than what we think. The stock price right now is down only 5% year to date and down only 7% over the last 52 weeks. To give a nice frame of reference right now, the S&P 500 is down 18%. So good old reliable is kicking the crap out of the S&P 500.
Summarize quickly, PE ratio 16.16, payout perfect 44.89%, 5-year dividend growth rate 5.95%. They've increased that dividend for 59 consecutive years and a nice juicy yield of 2.78%. Lanny, get ready. You look open. Ball's coming back to you here. Oh man, look at that. The one-handed grab. Tell us about dividend stock number 2.
Odell style. All right, guys, let's dive into that second dividend stock. Here we're talking Procter & Gamble, ticker symbol PG, another top 5 foundation stock. And they said, hey, J&J, you might have been increasing your dividend for over 59 years. Well, we're going to beat the heck out of you there in that category. They closed at $137.16. Forward EPS right now, from looking at expectations online, is only $5.95. P ratio is a little high for PG, trading at 23 times earnings, so slightly above the overall market. But lately, the PG stock has finally started to come a little bit back down. The last month, it's down about 5%. Last 6 months, down 11%. So year to date, they're actually down 16%. So they're coming down.
And that would make sense given the tight margins in this sector. If there's a company that's going to get hammered by inflation, by companies tightening up the budget, maybe moving from the name brands that Procter & Gamble has to more of the store brands to help save a few dollars on their budget, it's going to impact them. So it's not surprising, but still, PG's a company that's always trading at a premium to the market, but it's nice to see them coming down.
Exactly. Now let's dive into that payout ratio, the safety of the dividend. Lately, they have been on the little bit on the higher side, on that 40 to 60% range. They pay 91.33 cents per share per quarter. And guys, that means they pay a $3.65 annual dividend. Taking that over the around $6 EPS, that payout ratio is just about 61% right now.
Look at that third metric. 5-year average dividend growth rate, 5.60%. You already mentioned it. They've increased it for 68 consecutive years. They are at the top
Wow.
of the Dividend King list in terms of consecutive annual dividend increases.
68 years, man. How old are you, Bert? You're not 68. You're not even, you're not even half that.
I'm not. You barely are. Barely. All right. So let's look at that yield, the bonus metric.
Hey, you want to tell that to Magikarp?
You know what? We read some of the comments, everybody. We saw it in there. Maybe Laney and I will find a nice time to get a pack opening in there. A few of you would be interested. You tune in. We'll bust one out some point September.
What we'll do is we'll do 2 dividend stocks. We already have a brainstorming session on it, and then in between that first and second stock, we'll rip like 4 packs.
And then we'll go from there. We'll get a pack opening there because I want to see how many Magikarps we're about to pull for all of you, the viewers. Let's look at that bonus metric, the dividend yield, 2.66% for Procter. It's still above the market, below J&J. So it's interesting to see how Procter's shaking out. Let's summarize them quickly before heading into that last stock. PE 23.05, payout 61.4%, 5-year dividend growth rate 5.60%, years increasing 68 years, and a yield of 2.66%.
All right, guys, let's dive into that third dividend. Not just dividend growth stock, not just dividend aristocrat, but third dividend king here. We were talking about PepsiCo, ticker symbol PEP for those that think young, for those that think dividend growth. Now, right now, that stock price is down to $170.66. Over the last year, dating back to last September, they're actually up 8.64%, guys. This stock is up, aka they're saying, all right, PG and J&J, get out of my way, double stone cold stunner. And that's the bottom line because Pepsi said so. So they're walking down the ramp looking at that price to earnings ratio, and it is high though, Bert. What's that PE, man?
It's when you take the price divide by forward earnings of $6.69, 25.51.
Dang it, man.
Well,
Come on.
it's going up. It's doing something, right? So you'd expect a high PE ratio. We would have been screaming about this stock for months if their PE ratio were half of that, the price were increasing.
Give me 20.
All right, let's see how the rest of the metrics shake out here. Payout ratio, $4.60 annual dividend, payout ratio 68.76%.
A little on the high side, right now.
Yeah, it's in line with Coke though. So it seems like the sector is it's one that's not the lowest payout ratio. So you're never going to see Pepsi at a 40%. It's always going to probably be between 60 and 70.
Yeah, and I'm sure those earnings expectations are baking in tighter margins like PG. So, EPS, let's hope they blow it out, of the water. We'll have to see. But guys, looking at that dividend growth, obviously the reason why you dividend invest is because you want a growing dividend income stream. 50 plus years, and they're doing it at an average rate, beating the other two on this list at 7.42%. If you remember, J&J is about 6, PG is about 5.5. So this one is almost 7.5%.
It's great. That's great. Highest of the group. Let's look at that yield.
Rises to the top, baby.
Let's look at this dividend yield here for Pepsi. Their yield at the moment is 2.70%. So,
wow, guys.
Great yield for Pepsi, right in line with all the other companies that are featured in this video. Everyone, it's a very tight band of dividend yield. PG on the low end at 2.66%, Pepsi in second with 2.70%, and J&J is the highest at 2.78%.
Yeah, so we'll put all 3 dividend stocks here on the chart. And right now, I'll have to say that, wow, J&J is the best one on this list. If you smell what the dividend diplomats are cooking here, guys, because the PE ratio is the lowest, the payout ratio is the lowest, the yield is the highest, and the dividend growth is probably the most reliable.
Yeah, well, it's I agree. It's the consistent. All 3 are great companies. J&J is clearly the value. Let's see, Lanny. What do you think? Who do you think Magikarp's going to pick from this?
Honestly, I think Magikarp is going to be swimming with the fishes here, man.
Yeah,
I,
but all right, everybody. On that note, we'll put the chart back up one more time. We're both leaning J&J from this list of three. If you're going to be buying one right now, the diplomats are saying Johnson & Johnson is the one to add at the moment. But let us know what all of you are thinking from these three companies. Do you agree about our conclusion with Johnson & Johnson? Are you buying the other two? Are you buying none of these three? And are you putting your money elsewhere? And if that's the case, you better let us know in that comment section below what companies you're buying with your hard-earned cash.
Yeah, exactly. What other stocks are there to buy right now in the stock market that are not just dividend growth stocks, but dividend aristocrats and dividend kings? Let us know that in the comments. Do you still see a lot of value right now with Stanley Black and Deca, as Bert has been just averaging down on SWK? So let us know there. Obviously, there's a bunch of other stocks hitting the fan right now with Intel, Scott's Miracle-Gro. A lot of weird stuff going on with that CFO and that company right now. A lot of stocks really turning deep red. So let us know your feedback and thoughts in the comments there.
If you haven't already, subscribe to this channel. Give this video a nice thumbs up. Everybody, let's go. Keep buying great stocks. Keep growing your passive income.
Guys, that's the Hogan right there. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.